Hello, and welcome to another episode of the Market Pulse series. This is the 26th episode. My name is Rufas Kamau, Markets Analyst at FX Pesa. So there's quite a lot that has been happening in the markets today, as well as for the week. So we'll be looking at a very quick overview. Then we look at the market news that we're expecting tomorrow on Friday, and also a brief insight in what to expect next week on Monday through Friday. So besides that, we also look at the key market prices, key trends in the markets, as well as technical chart patterns, so that we understand where the markets have been and potentially understand where they might be headed next. So this is not investment advice, neither is it a recommendation to trade. So you should always do your own research and due diligence. So hello, J Squad, and welcome to the session. Thanks for joining in. So let's start with the economic calendar. Monday was a holiday. That was Easter Monday. Most of banks were closed. Tuesday, the markets were relatively quiet, save for news from China, where inflation came in at 0.7%, and also producer price index was at negative 2.5%, indicating a downward pressure on prices, which is considered to be very healthy for a bull market. So besides that, we also had the CPI data coming from the US, which slowed down. This was, I think, the second lowest in a year. The monthly gain in prices was 0.1%, and the annual CPI dropped from 6% by a whole percentage point to 5.0%. And this was taken as a very positive. And in this case, there is speculation that the Fed might go ahead and hold interest rates at the current level, which is 5%. So we are at this unprecedented level where interest rates in the US are currently at the same level as the CPI. So if this particular trend continues, inflation continues going down, and interest rates continue moving higher, then we'll be seeing the curve inverting. So the inversion of the curve would mean that inflation is lower and interest rates are higher, and that can be highly deflationary. It's not a desired environment, so we might not be seeing much higher rates. However, from 3 speeches that were presented by Fed members, I believe that was Goolsbee, Harker, and Kashkari, they are very insistent that they have not yet hit the target of 2%. So they are looking forward to making another 25 basis point hike on the next meeting, which will be on the 3rd of May. So Bank of Canada Governor, Bank of Canada Monetary Policy Report, rate statement, and overnight rate were released on Wednesday. We also saw the Bank of Canada maintain interest rates at 4.5%, meaning that they have already hit the end of their rate hike cycle. So with this happening, then focus now shifts to potentially the date when they will start cutting interest rates. So IMF meetings are still proceeding. Then early this morning, we had a surprise number coming from Australia, where the economy created 53,000 jobs compared to an expectation of 20.8 thousand jobs. So unemployment rate remained at 3.5%, against an expectation of 3.6%. So this was a set of good news. And then UK GDP came in slower than expected at 0.02%. And this was a huge drop, especially compared to the previous rise in January, which was 0.4%. So towards the end of the day, we have seen negative news coming from the US. We saw a negative 0.1% in our producer price index, basically showing downward pressure on prices. That was a core PPI. PPI was down 0.5%. Also very good information. And this is in line with what the Fed is looking to achieve. That is lower prices across the US, or much more stable prices. And in that case, the Fed might consider going easy on the interest rates. So we had a speech from Bank of Canada, Governor Macklem, at 4 p.m. And now, towards the end of the day, I don't think there's any major news besides the German president issuing a speech later at 9 p.m. So tomorrow, all focus will be on 2 data points, 3. So on one side, for the US, we'll be having retail sales as well as core retail sales at 3:30 p.m. This will be the most anticipated news for the day. It's expected to have the highest impact on the volatility. Then we also be looking at import prices as well as industrial production in the US. Before now, we shift forecast to preliminary University of Michigan consumer sentiment as well as inflation expectations at 5 p.m. So these are the two major news to focus on, though we might be having some fireworks coming from a speech by FOMC member Waller. So towards the end of the day, on Friday, we'll be having MPC member Tenreo. This is from the UK. It will be happening at 6:30 p.m. And now, just a brief overview, as I mentioned, of the following week. That is next week. The IMF meetings will still be continuing. They'll be ending on Sunday. Then on Monday, we look at Empire State Manufacturing Index, which is a key indicator of manufacturing trends in the US. This will be at 3:30 p.m. on Monday. We look at Chinese GDP. This will be very, very important. So remember, this week we had a series of data. One is the inflation. The other one was a balance of trade. We saw Chinese exports rise in March, which is indicating strong economic growth. So the actual data for economic growth in China will be released on April 18 on Tuesday at 5 a.m. So we also look at fixed asset investment, industrial production, NBS press conference, as well as retail sales and unemployment rate. So very strong and positive Chinese data is expected to be very positive for oil markets, since China is the biggest consumer or importer of oil. So in this case, if the Chinese economy is doing well, it reflects as positive demand for oil, and this tends to have a positive effect on oil prices. So climate count change, average earnings index, and unemployment rate for the UK. That's the jobs data for the UK at 9 a.m. on Tuesday. Then we look at the CPI for Canada, which is basically the inflation rate, before we look at the housing starts and building permits for the US. Then we look at the inflation in the UK. This is one of the biggest problems in Europe, inflation. So UK has a record high inflation of 10.4%, and this is becoming a big issue. It's almost getting entrenched, and they are not doing enough to control the rising inflation. Though the Bank of England went for a 50 basis point hike on the last meeting, you can see that inflation has remained relatively above 10% since August last year. So it has maintained along this level for some good time, and this is now becoming a big problem. So we will be looking at any trend, whether it's changing or whether it remains the same. So high inflation reading is expected to influence the Bank of England to go for a much stronger rate hike, and in that case, might result in a very strong pound against other pairs. But then if inflation is dropping significantly below 10%, then in that case, we could be seeing the Bank of England being a little bit more lenient. However, from their last meeting, it's very clear that the Bank of England is looking for stronger rate hikes. And in that case, it's safer to bet on a much stronger pound, knowing that the Bank of England will go for more rate hikes. So core CPI also very high at 6.2%. Then as we approach midday, we'll be looking at the final CPI for the Eurozone, which was previously 6.9%. Then we look at the CPI quarter over quarter for New Zealand before we jump to Philly Fed Manufacturing Index for the US on Thursday at 3:30 p.m. Then from there on, we'll be looking at retail sales in the UK, flash manufacturing and services PMI for the Eurozone, for the UK, as well as for the US. So that's a summary of what we will be expecting to see in the markets next week. So among other developments, we know that the earnings season is back. So on Friday, that is tomorrow, we'll be looking at two key earnings from major commercial banks such as Citibank and JP Morgan Chase, and the rest of the banks will be reporting their earnings next week. And this will give a very good insight on what to expect with the banking sector stocks. So there's a lot of weaknesses that people have been talking about based on our past information. But now, once the banks publish their books, we'll have a much more deeper insight in what's the current status and financial health of these banks, and we will be able to position ourselves armed with more information. So besides these, there was an announcement earlier that Warren Buffett is selling his banking stocks as a result of the banks hiding their losses. So once the information became public, Warren Buffett sold his banking positions. So we will be seeing some of that data tomorrow. So hopefully we will be having some fireworks this week and next week in the banking sector. So we also have a better understanding of the financial health of the US banking sector. So now that we are through with that, it's important that we also look at the charts and understand what has been happening in these charts. So for the UK 100 or the FTSE 100, there is still some upwards momentum. So as I mentioned, I'm watching this very closely because the two trend lines seem to be converging. You can see the trend line here moving this way. So if you look at the two trend lines here, they are approaching each other, meaning that we have a rising wedge. So at some point, I expect to see some weakness so that I can sell into the weakness. Especially considering that the Bank of England is about to go for even higher rate hikes, then short selling positions on the major stock market index might be in order. So we could be seeing the market choking out eventually, maybe end of this week or next week, then we go for short selling positions. So as we projected early in the morning during the market snapshot series, majors are making good run against the dollar. So we have seen the pound breaking this particular resistance here. So perhaps we'll be seeing some further or some more upside in pound USD. New Zealand USD got to our target today at 0.63104. So if you zoom out to the forward chart, then you'll notice that this is a really good and key level. And also this was the breaking point of this particular pattern here. So then we have the upper limit here. So we go to this level. So potentially going for this other high, which we saw last week. So Euro USD also managed to hit our target today, 1.10345. And now we have a newer target even higher, which is a price that we last saw some time back. This was in March. So we are looking at a price level around this area here. 1.117 is now our new target, especially after we get to 1.11. After we break this level successfully, sorry. So from here, which we managed to break today, then we'll be looking at potentially higher prices. But as we all know, whenever you have a major level being broken, the market tends to go back, retest the area, and then move higher. So something similar could be happening with the euro. Maybe we'll see the market pulling back, retesting this area before proceeding higher. USD CAD has been the most impressive currency pair this week with a very strong break downwards. And also on the 1 hour chart from the morning analysis, we expected a break here. And as you can see, the market is strongly pushing further downwards. And now our target is all the way down at 1.32627. So USDN made a very impressive break here and went all the way down, didn't quite get to the target level here. So there seems to be an intermittent area here, which was acting as support. So the market bounced from here and now may be headed back to the previous level of 132.89. So gold, on the other hand, managed to break a level that we were projecting. So we were expecting gold to hit 2031 early in the morning, and then it broke that level and went all the way up, eventually hitting a high of 2048. So as I've been maintaining since last week and the week before that, we're expecting even higher prices for gold. So the yearly high of 2069 and 2070 seems like a nice target. So there's no arguable resistance between this area of 2000 and 2070. So potentially gold will eventually get to 2069. And I could be wrong, but technicals tend to be right most of the time. So whenever you see there's no resistance, markets tend to flow. So we just need some further dollar weakness to see gold rally back to 2069. It's also a very key and very important price level. So there's a lot of stops and entries awaiting that level. So there is a good chance the market will go for that liquidity. So AUD/USD currently running very strongly. So from our analysis in the morning, we were expecting this level and this level. The market broke these quite clearly and went to a level that we are not expecting to see for the day. So currently 0.67920. So whenever there is such a strong rally, we expect some form of profit taking. Something similar to these markets don't move in a straight line. So potentially profit taking and some form of pullback might be expected in the AUD/USD currency pair. So we are now at a resistance level that we have not seen since last week. So potentially, if the market breaks, then we'll be seeing some form of pullback. So SP 500 still trading within range. So having changed direction from here, now we are back to retesting the resistance at 41.39. US30 managed to break quite well. And now it's looking to break yesterday's high. And also the US Tech 100 has been the most impressive. So since this morning, running all the way up at 13,076, being our target for the day. Then UK oil, from what we are seeing, this was a clean break, a retest of this level, and then a failure to move higher. And now we are moving back down to retest another key level of $85.849 per barrel. So if we have a successful test here, then our original thesis remains the same, that oil bounces from here and gets to push even higher. So you just have to be observant of what happens with price around 85.849. So the dollar index has been strongly bearish today, and now we could be seeing it testing a key trend line here that has been holding on well for the last couple of weeks. So if I zoom out, then you can see that there is still more room, more downside momentum. So if the dollar index keeps going down for the day and maybe tomorrow, then the majors will continue rising against the dollar, and that can be a precedent to a good run. So dollar is also losing to the Chinese yuan. So we have a clean break here. This was on on Wednesday. Market pulls back to retest the breaking point and then further back downwards. And now it's very clear that having broken out of this pattern here, the USD is losing to the Chinese yuan, and we could be seeing some further downside. And there is a potential chance that we'll be seeing the price falling all the way down to around this level, which is 6.7648. So that's it for today. I'll be checking if you have any questions or comments, and then I'll be responding to that right away. So what's your view about corporate earnings? If below estimates with the slowing pausing of interest, do you expect reaction as last year since process forward thinking? I would say that earnings tend to define the decisions that the investors make in a company. So if you see earnings slowing down, it's an overall macro indication of the strength of the consumer. So in this case, it's already priced in. So since the Fed has been tightening and basically reducing its budget, then it's natural that without more liquidity in the markets, then the earnings tend to slow down. So investors already know this. So now they're looking at the potential performance per company. They're looking at market share among other factors. So an overall drop in stocks earnings is already priced in. It's something that investors are already expecting in the markets. How come stocks are bullish, yet FOMC minutes projected a recession? So even if there's a recession, we normally tend to see the preceding things being stocks on the rise, unemployment at all-time lows, as you find that people have to work more in order to earn a living and sustain the same level of living, especially when there is high inflation and a combination of high interest rates. So even before the 2728, there was a like full-scale employment. Earnings were really good up until the collapse of Lehman Brothers. That's when we started seeing the holes in the markets, and things went down really quickly. So it's the same thing. As long as we're headed into a recession, we will be seeing out of good stuff before we get the bad stuff happening in the markets. So as for now, it seems like our stocks are doing really well. They might continue doing well up until something breaks. So thank you very much, guys. Thank you for your time. I really enjoy being with you guys and getting to share this. So as we head into tomorrow, we know I will not be doing a presentation. So the expectation is that I'll be back on Monday, but for now, I'm taking a 2 weeks break. So we will be having Samson Zera running these sessions from Monday. So you will be enjoying a different voice as well as a different perspective on what's happening in the markets, and maybe even a better way of analyzing and visualizing things in the markets. So thank you guys, and I hope to see you on the next one. Also remember to check out our latest podcast on inflation. It's available on all major podcast channels. All you have to search for is Bullish Banter. And also, if you need a link, just go check out our social media, especially Twitter. You'll get the link and get to listen to what you have to say. Hey, Annette, I'll miss you guys too. How did you become a profitable FX trader? By turning up every day. That's all what I always say. Sharpening your Forex knowledge. Just turn up every day. If you want to learn more, I recommend a channel called No Nonsense Forex on YouTube. Try and check it out. Malombe, nakuona sana. Thanks, Judes.